Welcome to the Barnes Group Company Insurance Plan. When you're done with the video, you should be able to make an informed decision about the medical plan that's best for you, your family, and your finances. Let's take a look at who's eligible for health insurance. As an employee of Cost Cutters or Supercuts, you are eligible for benefits under the following conditions. You must be a full-time employee working 30 hours or more to be eligible. There is a 91-day wait period from the date of hire. All full-time new hires will be eligible for their insurance to start on the 91st day exactly, if you choose to enroll. Will be offered medical insurance through Blue Cross and Blue Shield. Now let's look at the HDP versus the PPO style health insurance plans. There are two types of medical plans to choose from. There's high deductible plan, or HDP, or the PPO style plan. The HDP plan has a high deductible that needs to be met per year before your coinsurance pays a percentage of your claims. The HDP plans are designed for affordability. Let's look at this example. Let's say your deductible is $2,000 a year. You now go to your doctor for low back pain and you pay $100 for that visit. You still have $1,900 more to reach your deductible. Your doctor orders an MRI of your lower back and you pay $1,000 for that MRI. Now you still have to pay $900 more to reach your deductible. After a series of visits with your doctor and a chiropractor, you have $0 left to reach your deductible. Now you will pay a percentage of that cost, which is called co-insurance. If your co-insurance is 20%, and the next time you visit your doctor, your bill is $100, then you'll pay $20 and the insurance will pay $80. Let's look at how these plans work. PPO style plans have a copay that you pay at the doctor's office before you meet your deductible. Both the HDP and the PPO plan have a $4,250 yearly deductible, but with the PPO plan, your copay is $30 and has a prescription plan of $10 for generics and $35 for non-generics. The PPO plans are more expensive. How does the PPO plan work? You pay part, and the PPO pays part. PPO uses cost sharing to help keep costs down by using a network of care providers that have negotiated discounts. When using in-network providers, the PPO contributes toward the cost of service. A PPO plan may be right for you if you want the freedom to choose almost any medical facility or provider for your healthcare needs. You want a portion of out-of-network claims to be covered by your insurance company. You don't want to get referrals before visiting a specialist. One of the benefits of the high deductible plan is you can also have an HSA or health savings account plan with it. What this does is it helps save for future eligible health expenses. An HSA can only be used with the high deductible plans. Once you enroll in a high deductible plan, you then may open your health savings account. You designate the amount you want to put in your account each pay period. This will be payroll deducted from your check and deposited directly into your health savings account for you. The sign-up information is included in your enrollment packet. Let's look at how a health savings account can benefit you and help you with your medical payments. You now have a high deductible insurance plan and you can open a health savings account. What this does is protects you from big medical bills. It helps you pay your deductibles, it's tax deductible, it's tax deferred growth, and it's tax-free for medical care. A high deductible plan is intended to cover serious illness or injury once the deductible has been met. The health savings account is used to cover small and routine medical expenses until the deductible is met. Let's look at what you pay for your insurance. The company will contribute a significant amount towards your premium. Example, the employee-only HDP plan has a monthly premium of $356.59. The portion you pay is $40 per pay period, or $1,040 per year. The company pays $3,238.08 of your yearly premium. Your portion of your premium is payroll deducted from your check. All payroll deductions for premiums are Section 125 pre-taxed. Pre-taxed plans will reduce your out-of-pocket cost. Let's look at how a pre-tax plan benefits you. A pre-tax health insurance plan allows you to pay your premiums with before-tax money. Your contributions are taken out of your paychecks before taxes are calculated, resulting in a reduction of your taxable wages. Example, your hourly rate is $9 an hour. Times 75 hours is $675. Your biweekly insurance rate is $40. If it was not pre-taxed, your take-home would be $495.76. With pre-tax, your take-home is $506.29. Your take-home is $10.53 more than if it were not pre-taxed. Your $40 biweekly premium is now $29.47 instead of $40. Now let's walk you through how to fill out the application properly. Pull out your application if you have one. You will receive an insurance packet approximately 3 weeks prior to your eligible date. You now must decide if you're taking or waiving the insurance. If you're taking the insurance, fill out the form that looks like this. It should have the Blue Cross, Blue Shield, and Nebraska at the top. It'll say Group Health Enrollment Form. Read all the green highlighted areas for the explanation. Fill in all areas in Section A, and then in Section B, select who you are taking insurance for. Select which plan. Are you wanting the PPO or the HDP? The PPO plan for employee only is $79.16 per pay period, and the high deductible plan for employee only is $40. If you want to add family members or spouses or children, you need to look at the sheet that shows the deduction amount per pay period. Now fill in Section D only if you're adding a spouse or a child. Now let's look at the second page of the application process. You must sign and date Section G if you are taking in the insurance. Make sure you date also. If you're waiving the insurance offered to you, only fill in Section H, Declination of Coverage. Indicate the reason you're waiving the insurance. Sign and date. When you're done with the application, you need to fax both pages to Stacy at 855-414-5580, or you can mail to the regional office. If you don't have the email information, contact your manager for that. The application must be received no later than the eligible date. If it's past the date of eligibility, you will no longer be eligible until open enrollment again. Pay close attention to your packet. It'll tell you what your eligible date is and what date it needs to be returned in order to process it in time. Let's go back to the health savings account. Now that you've filled out your application and you've taken the high deductible plan, you can now open a health savings account, which we have through Union Bank and Trust in Lincoln, Nebraska. It does not matter if you don't have a Union Bank in your area, you can still sign up for the health savings account. All you have to do is follow the instructions of the information that should be in your packet. If you did get this information, please call Stacy at 402-423-9599 extension 101 and ask for the health savings account information. It will then be mailed out to you. This is not an employer-sponsored plan, which means you own the plan. Union Bank is the bank we have chosen to set up for your HSA account. To open your account, you need to go to www.ubt.com. Click on the Open Account Online link under Quick Links, located in the middle left of the screen. Then click Health Savings Account under Personal Accounts and complete the online application. If you don't have access to online or you don't want to go through that process, you can also call and set up your account through a Union Bank rep at 402-323-1482 or 800-297-2837. If you still have questions, please call Stacy at the office for more explanation. Let's move on to ancillary benefits. These benefits are considered add-ons and at the cost of the employee. We are offering dental, vision, accident, hospital, and life. Maybe you've heard of ancillary benefits, but not really sure what they are. Ancillary benefits are a secondary type of insurance coverage that will help cover miscellaneous medical expenses that are incurred during a stay at the hospital or if you have an accident. These benefits can include other types of coverage you would pay out of pocket normally, like dental, vision, and life. These benefits are completely voluntary and paid 100% by the employee. We offer a convenient biweekly pay deduction that comes from your check. These are very low premiums that you will pay because of negotiated group rates. Assurity is accident and hospital. Assurity will help protect you and your families from the cost of accidental injuries and hospital confinements. You do not have to have medical insurance in place to take the accident policy. You do have to have medical insurance in place to take the hospital policy. The plan will pay a fixed cash benefit for medical treatments associated with a covered accident and a fixed amount per day for hospital confinement. Both policies are considered a supplemental insurance. Some applicants with pre-existing conditions may not be eligible. Both accident and hospital have wellness riders attached to them. What this is, it's a benefit that's paid once a year when you get an annual wellness checkup or a complete blood work, after 30 days of a waiting period once you've signed up. What it does is it pays $150 per employee, spouse, and one child per policy year. Approximately 10 days after you've completed your wellness checkup and turned in your information to Assurity, you will receive a check for $150 per person on the policy who had the checkup. Double the amount if you have both accident and hospital policies. If you take advantage of the wellness checkup, the amount you receive will pay for more than the premiums you are paying per year. Getting a yearly wellness checkup can help detect illness and diseases early when you're most treatable. Dental coverage is provided through Principal. Dental covers routine exams and cleanings 1 per 6 months. X-rays, bite wings are 1 per year. Orthodontia is covered for ages 18 and under. Dental is for preferred providers, dentists that agree to charge reduced fees for dental care. To be covered, you must go to an in-network dentist. Dentists who participate in the network agree to submit claims on your behalf. If you go to a dentist that's not in the network, you will be billed for any amount over the considered charge. Vision is also provided through Principal. Vision provides you a quality vision coverage, value, and savings through an established network of providers. You receive the highest level of care and the lowest out-of-pocket costs. You will get a well vision exam, extensive selection of eyewear, an average savings of $320 per year on eye exam and eyewear, 20% off any amount over the allowance on frames, an average savings of 20 to 25% on contact lens, $10 copay on exams 1 per year, $25 copay on glasses and lenses 1 per every year, $150 allowance and 20% off an amount over allowance on frames every 2 years, a $60 copay on contact lens exams and fittings 1 per year, $150 allowance on contacts, 15% off laser vision correction, contracted facilities only. You will have to check with VSP Vision Care to find out who those doctors are that are in network. We also offer term life insurance through Principal. The benefit amount for employees are purchased in increments of $10,000. The benefit amounts for spouse can be purchased in increments of $5,000. Benefit amounts for children 14 days or older can be purchased for $5,000, $10,000, $15,000, $20,000, or $25,000. For spouse and children, amount you purchase cannot exceed 50% of the amount you purchase for yourself. For example, if you are purchasing $20,000 for yourself, you can only do up to $10,000 for your spouse because it's half of what you've purchased for yourself. The minimum amount to purchase is $10,000 and the maximum is $150,000. You can choose to do more than $150,000 but may be subject to medical exam. Benefits are age rated. The premiums are based on your age. The premiums will increase as you age. An age chart and rates is included in your packet, or you can call HR and get your rate. If you have your application handy, you might want to pull it out and go through it as we walk you through. The Assurity Life Insurance Company application is to sign up for accident and or hospital. You need to fill in Section 1, Primary Proposed Insured. If you're adding a spouse or child, you need to fill in Sections 2 and 3. In Section 4, you need to name a beneficiary if you're taking accident or hospital. There is an accidental death amount that is paid out of $25,000 to $50,000. So if there was a death, you would need to make sure you name a beneficiary that money would go to. You need to answer all the questions in Section 5 for all coverages. If you have an application, the last page is where you're going to sign and date the agreement. Make sure you read through and then sign and date. If you're declining both of the plans, you need to check on here, declining accident or declining hospital, and then sign and date also. If you're only declining one or the other, check which one you're declining and still fill out the rest of the information. If you're declining both, you only need to fill out the top of the first page, number 1, and then sign and date. If you've chosen any of the principal benefits, you need to fill out the application that says principal. This is for dental, vision, or life. Fill in the employee information. Look at all of the highlighted green areas. Those are the ones you will need to fill out. Fill in eligible dependents if you're adding a spouse or child. You need to select the coverage and type. If choosing life, fill in all the areas. If you're choosing dental, vision, or life, you need to select if it's for employee, domestic, or children. The prices are at the top for you already. If you're declining any of them, make sure you mark decline. If you've chosen voluntary term life, you also need to fill out your beneficiaries, your primary, and your contingent. Make sure if you are declining, you decline coverage for yourself, spouse, or individual, and then sign and date at the bottom. When you're all finished with all 3 applications, they must be faxed, emailed, or mailed to Stacy at the home office. If you don't have that information available, ask your manager for that information. Hopefully after watching this video, you have a better understanding of the benefits that we offer our employees. If you still have questions, you can contact anybody on this page. The most important thing to remember is even if you do not want any of the insurance, you still must fill out the applications and mark decline, sign, and date, and fax them back. If you are wanting insurance, the most important thing to remember is the eligible date. All applications must be returned before that date, or else you are no longer eligible. Thank you and have a great day.